Okay, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. Neon wants to know what kind of computer screens I have behind me. They're just 4K Samsung QLED of some sort of, I mean, there's nothing special. Samsung QLED 4K. So, anyways, there you go. You can buy them. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello? There you go, Neon. He wants to know the screens behind me. So there's 1, 2, 3, 4, 5. So there's only 5. But the interesting thing, like the reason I did that is it's exact dimensions that I had for my 1822s. So I went from 1822s that were 1080p each to just 5 4K, and it was the same size. It was pretty amazing. I could have gone bigger. I probably should have gone 550s, but I don't know. It fit the space. So anyways, there you go. What Neon, I think you'd find more interesting is behind this, I had the wall built to hold 18 screens, plus PCs and stuff. So the wall is more interesting than the screens. All right, so without further ado, happy holidays. And we're getting ready for the new year. That's going to be good. Mike, a little closer. Really? All right. So, Happy New Year, happy holidays. Hope you had an opportunity to hang with family and all that kind of stuff and touch base with your loved ones and make them feel all good inside. They wonder where you go all the time and what you do. They're like, what does he do all day? What's this Forex thing? So it's nice for you to touch base with them from time to time. Hey, Traders Way makes these webinars possible. Why don't you visit tradersway.com? Just out of loyalty and respect, say thank you by opening up an account. Once you have a back office, you can download MT4. With that, you can place some trades and test the execution speed. You can see the spreads, and world-class customer service comes along with that. Oh, and check out the swaps. Very nice. Very nice. Very, very nice. So, visit tradersway.com today. Open up a trading account. I'm here every single day with the charge of helping you become successful. So think about that. They said, Wayne, help our traders succeed. Because successful, profitable traders are not only happier, but they trade longer. Right? So anyways. All right, so I thought for today we would go over the calendar and take a look at what's coming up this week. It's going to be a weird week, obviously. There's holidays and New Year's and all these things. Markets are closed, markets are open. So really, I hope you've taken the opportunity to develop your bias for next year. If you have not developed a bias for next year, you're going to struggle as a trader. So if someone says, hey, I'm really worried about the stock market, my retirement account, is the market going to go up or is it going to crash? You need to have a solid answer for that. Okay? And once you have a solid answer for that, whether it goes up or down and why, then from now to the end of the year, you can create strategies. You can create trade plans based on that. And for example, maybe you say, well, the election at the end of the year is a big wild card. Well, then how about between now and September? You should have some sort of plan. Oh, Prince Philip spent the whole weekend going through fundamentals for every country. That is a very good start, Prince. Congratulations. So anyways, that being said, hopefully you've done your homework. You can see, even with medium on the calendar, it's a pretty light calendar. Your German retail sales today, whoop-de-doo. Okay. It's interesting. They've changed the, these should be red on the impact. Interesting. So PMI, great. Weekless jobless claims, great. FOMC meeting minutes. Well, this is important because you may believe the Fed is done cutting interest rates. Okay? If you look at the meeting minutes, you might find that they want to cut one more time. Do you think that's a big deal? Well, it is a big deal. If the Fed is going to cut, the dollar's going to get strong. Okay? If they're done cutting, the dollar will remain weak. Okay? So that's it. So you should probably pay attention. Right? Download those FOMC meeting minutes and try to figure that out. Now, they're very easy to read, so don't be intimidated by them. But also remember, the other aspect of reading something like the FOMC meeting minutes is one day you're going to need to impress somebody. And you can drop these little seeds and say, oh, well, you know, I was reading the last FOMC meeting minutes like I always do. And it's amazing what you can find in there that the media and the press just don't cover because they don't do the work anymore. No one seems to do the work. Well, I actually download the meeting minutes and I go through it line by line and I look at what they discussed and, you know, whatever. And you thread your little story that you do the work and you're worth investing in. Okay. Anyways, Friday. Okay. Bank of Canada. Very, very interesting. Okay. German jobs and all that. Okay. Fine. Again, all that leads to a macro play and we're more interested in what Lagarde is saying in regards to the ECB than German unemployment specifically. Okay. And then next week, I think will be interesting. So in fact, we can actually, why don't we just do next week as well? But notice all the CAD stuff. Now it's interesting. Central bankers tend to want to talk a lot when changes are coming because they need time to explain it. So pay attention to that. All right, so let's go to next Monday now, Monday the 6th. Okay, and I want to just switch this to high. Bank of Canada interest rate decision. Okay, this is important. Okay, and you should be able to figure out what they're likely to do now, this week, not next week. Okay, all right, and then Tuesday comes out ISM services here. ISM services is a fantastic release. Okay, and it's coming out on Tuesday, so it gives you lots of people time to do modeling. Okay, to try to figure out non-farm payrolls, which is coming up later. Anyways, ECB meeting on Thursday, then FOMC Friday. So very, very nice week next week. Spread out really nice, right? Bank of Canada interest rate decision on Monday, ISM services on Tuesday, right? Wednesday, maybe you can take off. Thursday, ECB, Friday, non-farm payrolls and kitty CAD report jobs. Very nice week next week. And then, of course, on Thursday as well is the swing trading, the first swing trading group meeting for 2020. And I think the markets are going to be very interesting by then. All right, so I propose that we just burn through some charts today. And then I bid you adieu. I just wanted to let you know that even though it's holidays, you're important to me. Our community is important to me. And so I wanted to be here for us to at least gather quickly as a group and look at our setups together. Even though you can see, even on like 4-hour charts, things are quite slow, but they are not always going to be slow. Okay? And so I just wanted to take a half an hour to 45 minutes to get with you and just make sure everything's good. Okay? And if you have questions, I'm here to answer questions as well. Okay? Okay, so Aussie 4-hour, okay, currently is up, 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 down, down, buy, up, 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 down, down. And if you're a bull, you should be aggressive because the 21 is above the 55 and price is above the 55. Wow, I think I screwed that up. Let's do it again. The 21 is above the 55 and price is above the 21. So you should be bullish and aggressive only if you're a bull. Thank you, participant. LAD. Okay, only if you're a bull. If you're a bull, this is very, very bullish. And if you're a bear, you should not do anything. That's what all of this says. Okay? And if you were looking to be a bear sometime in the future, this is sort of the best price you would want that kind of change in direction to occur. Okay? You're actually thinking 76.50. Right? And it's funny because we're right there now. If you wanted to be a bear. Now, I don't recommend, just selling because of the price. So what you need to do if you're a bear is when you're up here, look for some sort of reversal pattern. Okay? And then on big reversals, very often you'll need, let's do this way. On very big reversals, you're going to need like, a small reversal down and then a bigger reversal. So, you'd have a double top and then a double top of a double top. And you've heard me say that before, right? HK Trader says, do you think the COT report is important? Yes, that's why I put it on the Forex.Today website. Okay. So anyways, what did I do with it? I think I left it open, didn't I? Yeah, so it's on the Forex.Today website because I do think it's important. Okay. I got to update this. We're about 11,000 people in our community now. Okay, so there it is. There's the COT report. And of course, you can change the currencies here. Yeah, it's beautiful. Okay. So look at this, the net change. Here's the net change going back to October. Very little change. Very, very little change. Anyways, you can go through all the pairs there. That's Forex.Today. All right, so anyways, that's Aussie. You probably already have all the ends done. So let me just do the Swiss franc pairs. Well, HK, there shouldn't be any confusion because it's just numbers. So the numbers are the numbers. There's no real interpretation to it. So let's bang this out. Cool. Now, what do you think my bias is for the Swiss franc pairs right now? And what have they been for the last while? Bullish or bearish? Hey, Pumpo. Am I bullish on these pairs or bearish on these pairs? Huh? Hello? I am bearish on these pairs. Okay? I'm bearish. For the next few weeks. What's up, Guru? For the next few weeks, I'm a bear. Okay? Cool. So let's try to figure this out. So let's go on to a 15-minute chart. As you can see, I have this set up bearish, actually. So that should have been a hint. You should be able by now, even though this is a test layout, most of you should be able to figure out that that's bearish. Just the chart itself. See, if I was a bull, the chart would look like this. Okay? Nothing's changed except my bias. So that's a bullish point of view. This is a bearish point of view. Okay? Nothing's changed. Same stuff. Just different targets. And generally speaking, the entries are about the same. The only difference is one is heading down and one's heading up. So what I would like if I were me, and of course that doesn't mean we'll get it, but what I'm looking for are things like this. Do you see that? How gorgeous. That was the market open. How many people are at their desk at the market open? Mm-hmm. Hey, you don't have to say it to me. Mm-hmm. Mm-hmm. And then here's the sell zone for tomorrow. Okay. But look at that, right at the market open. Uh-huh. Oh, a couple of you were, huh? All right, so there's a great example. So that's kitty cat. You can see this is also a bearish setup. Let me back out here. This is also a bearish setup. It also opened right in the sell zone at the market open today. These are, by the way, these are all day trade setups. Okay. And you can see nothing's really happened to this. But part of the story is it didn't go up. That's good if you're a bear, right? So this whole zone, just for today, not yesterday, not tomorrow, just today, this is the sell zone for bears. So that's kind of cool, right? It didn't go above that, definitely held. And so what bears are hoping for, doesn't mean you'll get it, is between now and tomorrow, right there. But many more, I don't even know what markets are open. Half the market's probably not even open. A lot of people are also on vacation, right? So not big moves right now, but we're just day trading, right? We're just day trading. So pound Swissy, here's your Kiwi Swissy. Let's go to a smaller time frame. And, well, let's go out to the bigger one. I was hoping for this earlier, right? Now my plan B is here. We're at my plan B. So now I can look for bearish setups up here. This one didn't come to fruition. Oops. Well, let's kill this one at least. Okay, so now I'd look for something similar up here. Okay, so do you see, like, in here I have permission to start looking for bearishness? So now I can go from a swing trade. This is a weekly or monthly swing trade. I guess it's weekly. This is last week's swing trade. So what about today's bearish day trade? And more importantly, tomorrow's bearish day trade. Okay, that's what I would be looking at on smaller time frames now. Okay, and remember, the point of interest is a monthly reversal here. Actually, monthly profit taking up there, which is slightly different, right? So bears now, we don't know if bears are right, but what a bear would be planning is this kind of thing. And the more they get it, the better they feel. Now, if suddenly the market changes and you get this, and you're above the sell zones, you take a walk. Happy holidays. Okay. Hope is more bullish. So Hope's point of view would be this. Okay. This would be Hope's point of view. Okay. She says this would be more up than down, and that's cool. So here's the thing, you wait. No, I do not, HK Trader. Okay. We don't know what they're going to do, Stephen. All right. So this one's all laid out. I don't know how long ago I did this one. Looks like, just based on the way that that was drawn, that would have been before Christmas anyways. So this is me saying, hey man, this looks very sideways. Let it move sideways till it breaks. Looks like it was pretty decent advice. Looks like it may have challenged the upper range, right? If you consider this linear regression, you know, we went from one standard deviation below the mean back to the mean, and we're trying to get one standard deviation above the mean, right? And therefore, the funny thing is you can use this range like Bollinger Bands. This is the upper Bollinger Band. This is the lower Bollinger Band for 2 standard deviations. And as your statistics class might have taught you, this distance here represents 95% of the price action. Okay. Okay. And then like 3 standard deviations is like 97%. But, you know, statistics are funny, right? Like there's a 99% chance the moon isn't going to crash into the earth today. You know, like, so not very helpful. Charlie for real says, are these new day trading setups and templates and EAs and stuff? Are they in the $5 package? No, and nor will they be. But I'm still testing them. These are things that I designed, and they will be in the complete package, but not the basic package. No, they're not required. Now my pivot points are, and they're the same as the pivot points, right? So the pivot points are the required. These little ones where you change the biases, I mean, you can do the same just by looking. So are they required? No, they're not required. They're just something I'm playing with as a teaching tool that might help people develop skills, right? But are they required? No. So like, we'll go back and look at this Kiwi Swissy, okay? And this is a bullish point of view, and this is a buy zone, 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 this is a buy zone. But if I change it to the one you get in the $5 thing at metatraders.com, it looks like this. And it's, right? And here's your buy zone. It's the same buy zone. So here we go. So with that in mind, here's the buy zone. Here's the buy zone. Oh, no. Here's the buy zone. Here's the buy zone. Here's today's buy zone. Right? So all that the new template is doing is basically based on your bias, ignoring all these other things and removing them from the charts. Because for some reason, some people come in, like, you got to look at it from my point of view. People come in and they heckle, right? And they come in, they're like, oh my God, Wayne, look at all those lines. You're crazy. This trading's stupid. I'm like, really? So anyway, so if I can then instead make it easier for the newbies, okay, by doing it this way. So let's make it bullish again. There, a little slowed. Okay, all it's done is removed the non-bullish stuff. But now, the reason I like the idea and the reason I did this is it will force people to say, if you're a bull, that's how the world works. Okay? This is how the world works. You've made a decision. Right? Or you've made a bearish decision instead of a bullish decision. Nothing's changed except your point of view. And of course, the major danger for new traders is they look at this chart and they don't know if they're a bull or a bear. So therefore, everything on their chart, whether there's pivot points or not, is irrelevant. If you don't know what you're doing, there's no tool on here that's going to make you a better trader, because you're not even a trader. You're not even real. How could you be a market participant and you don't even know what you do? How can you one day be a professional soccer player if you don't even know what team you're on or what position you play? So anyways, so that's it. All of this is the same. And then, of course, my true love, I love day trading, by the way, and I love scalping and all that. But my sweet baby really are these weekly swings, right? So here's last week's swing trade, right? Look, on the first hour of the first day, the market said, oh, if you buy it there, we're going here. Done. That's my sweet baby. I love that all day, every day. On the first hour of the first day of the week, you buy it off the CPP, and because of that, you're going for R2. Like if you can't do that, doesn't everything else look more complicated? Hussein says, hey, Mr. Wade, may I ask about Elliott Wave? What do you think about it? It's mostly price action and Fibonacci, so it won't hurt you. So if it fits your personality and you follow the rules like perfectly, if you're disciplined, it'll work fine for you. Do you need it? No. Is it wrong? No. Okay? But you need to be fanatical about whatever you do. So if you do what I do and you're fanatical about it, you will succeed. If you prefer Elliott Wave, but you're fanatical about it, you're like ridiculous. You follow rules of engagement to the point of being ridiculous. You will be successful. But if you do what I do, but you're mediocre, you're going to suck. Okay? These are pivot points. These are weekly pivot points, okay? A-Rod. So A-Rod, if you want my chart templates, it's metatraders.com. It's going to cost you $5. Okay, you get this and a bunch of other things. Okay? So technique, guys, is not going to make up for mediocrity. Nothing makes up for mediocrity. Okay? Here's the monthly point of view. Okay? Let's take a look at Kiwi Swiss franc for the month. Okay? The interesting thing I guess I got to go back. Let's do this on a 4-hour chart now. Okay. All right. If you go back in time, the swing trading group got together on this week, right there. And our interpretation of what would happen in the Swiss franc, Kiwi Swiss franc specifically, is it would go up in September, come down in September. I don't know how much, but at least a significant pullback. Maybe a double bottom is what was discussed back here. And then if you are able to get back in by October, you're going to hold it to the period between Thanksgiving and Christmas, basically, which is this period. How many people agree with this statement? That this would create a big first move, there would be a very significant pullback, and then if you got in at 2, you would hold it till 3, and then from there, we wash our hands clean, and we start 2020 building a new medium-term portfolio. So, you know, guys, like, when we go over this, and I've gone over it a million times, I was with half of you in a swing trading group doing it, it makes all these other things, like, just not even interesting. Things like, I don't know, like I said, I'm not poo-pooing against Elliott Wave. It just doesn't fit my personality. But, like, imagine me 15 years ago and I'm figuring this out. Do you understand? Like, I don't know anything else, and there's been I've seen the email promotions where there's been, what, 1 million different cool new trading strategies emailed to me. If I only pay $1,000, I'll get the new cool trading strategy. I got 1 million emails like that. And I've never once fallen for them because I've never needed anything else. You know, like, you understand, like, all the other hype when I'm like, dude, you just do this, you just do this. And then on the smaller scale, guys, look, this is a buy zone. This is a buy zone, right? It's wonderful. Like, I don't need the other noise. There's nothing else I've ever needed. Just like, I feel like I know how to trade. I don't know the other things. I know I'm not exciting. And I know I don't market and advertise very well. You can tell by the size of our group. Like, for some reason, there's only 11,000 people on the YouTube channel, right? It should be 11,000 a day watching the video. Pro Trader says, what if you get stopped out? You'll either lose a little bit of money or a little bit more money. Pro Trader, like, risk management covers all that. I don't care about getting knocked out because I never risk a lot of money. Okay. So anyways, so that's that. So let's go back to trading. One of the things I want to look at is WTI. Okay. We're back to the top of the first range. The next move is around 77. Okay. So this is where you should look into seasonality for oil. You can go to the EIA website. And every week they do an oil inventories chart, and they'll show you where inventories are relative to historic norms. Also, you'll know that now that we're through the worst of the winter, refineries will not likely continue to buy oil to create things like heating oil. So what they do is they buy crude, they refine it, and make products out of it. So in the early winter days, like October, November, December, they're buying crude to make heating oil in anticipation of the northeast part of the United States getting cold, and they still use a lot of heating oil there for their heaters. It's old school, but it's still there. But they've already built those inventories now, right? Like you don't wait until it gets cold and then you spend 7 weeks making heating oil and then deliver it in May. You see what I mean? So you have to ask, like, where's the demand for oil? When we talk about macroeconomics and oil, who is actually demanding oil? It's the refiners that make products out of it and then they sell it to people. So they need to buy the crude, refine the crude into a product, store it for some period of time, and then distribute it through the pipeline to whoever, right? Sell it into the open market. Because somebody buys plastic and somebody buys jet fuel and somebody buys gasoline and so on and so forth, right? All these products are there. So usually around the new year, right, is when the coldest part of the weather is hit in New York and Boston and such. And that's when the demand for the heating oils, right? So all of that has been pre-made. Now the next part of what gets done is refineries between now and June buy crude to refine into gasoline. Okay? So that's a 6-month period though. So once they're done, let's say if they're done the heating oil stuff, they also have to build in a time when to shut down the refineries, clean the pipes, so to speak. And then, so they'll go offline from time to time. And then when they come back, wherever, because we don't know exactly when they're going to break down and clean themselves up. But at some point, there will be lots of demand for crude oil to create gasoline in anticipation for summer in the United States, in which driving is a big deal because it's such a big country, right? So be careful is all I'm saying, right? We forget a lot of this stuff looks like video games and it goes up and up and up. I was very clear when everyone was very pessimistic with oil. When they were very pessimistic with oil, I said, look, is it going to 40 or is it going to 60? Most of you guys said it would go to 60. So it went up to 60. Great. But you see, like, you understand how important I was? And by the way, 50 to 60, that's well, actually, 52 to 62. On a percentage basis, that's a huge return, isn't it? It's huge, right? So congratulations. So now you have to anticipate, well, could it possibly do this before the next up? Okay? So on and so forth. But I want you to think bigger. Like I'm always trying to get you to think bigger, right? And you can see, like, if you had done this early in the year, you would have done just fine. And by the way, I have taught you for 15 years that there's a certain time of year where inventories traditionally hit peak. And from that point, because when inventories go up, price goes down, right? And then when inventories hits a peak and heads down, it affects price. So what have I taught you? What day of the year represents peak oil inventories to me? Maybe not to you, but to me. What do you know? How about this? Type in a question mark if you don't know. What day of the year represents peak oil inventories in the United States to me? It's a very general thing, but I've done it. Okay? I went back through something like 50 years of oil inventory data. Yeah, I know, right? Thank you. June 1st. June 1st is right here, y'all. And from this point, I say, generally speaking, not down. Doesn't mean up, but not down. Because whether it's true or not is also irrelevant. In my mind, this day right here is the highest level of oil in storage. So when oil inventories are rising, price is falling. And then once oil inventories stop rising, they should, generally speaking, go up. Now, the reason I say things like generally speaking doesn't mean it has to go up or it will go up, but it means your bias goes from bear to bull and you start looking for opportunities to buy. Like here's a reversal pattern, for example. You might have tried buying this one and you were only correct. You were only profitable for a week and a half. Yeah, I'm sorry. This is a very obvious buy. Okay, and this is a take profit. Okay, this area was the buy. Probably not very good, right? And this was a buy, and so on and so forth. Okay. So what you do is like, again, here's your buy zone. Here's your buy zone. This was a little off, but you probably would have triple bottomed it, right? This was a buy. So what happens is, it doesn't mean it goes up, but it means you should change your bias. So neurotic says, is this seasonality increasing supply and demand? No. It has nothing to do with demand. So the way that I do this, and I think it's generally accurate, but remember, economic models are by and large stupid in my opinion. But they're helpful for, for trying to figure things out. But, just the idea that, economics, by the way, is built on people being rational. I think people are irrational, emotional morons. Okay? And so just the idea of economics being based on rational players, I know it's immediately wrong. And I know this too because my professors come out and they teach me what's going to happen with money and what's going to happen with gold based on their economic models. And I'm like, that's not how it works. I trade money all day. I trade gold all day. I trade oil all day. That's not how it works. And then I get a C- on my paper. I'm like, well, so I keep that shit to myself. But, there's a difference between economics and trading, right? But let's look at the economic model. Demand. Okay? Unless the world has a zombie apocalypse, oil demand is very steady. Think of the number of factories in China, the number of factories in the United States, and just really the number of factories globally. If they make stuff, they're going to need energy. Let's just think of it that way. Now, why do they make stuff? Well, it's how they keep people employed. It's how they pass dividends to their shareholders. It's how they provide a service or a product to their society. It's what we do. Like, let me give you another example. I don't know if it's hot in your country today or cold in your country today, because you might be in South Africa and it's hot as heck. You might be in Canada and it's frozen hell. Okay? But whether you have air conditioning on or heating on today, what's the likelihood tomorrow you're like, okay, I'm just going to turn this stuff off? Tomorrow, I'm just going to freeze to death. Or tomorrow, I'm just going to sit in my house with no electricity. There's going to be no air conditioning. All the food in my fridge is going to spoil, but I'm going to save $5. Right? Like, the probability of you and your neighbors choosing to use energy tomorrow, like you did yesterday and today, is pretty high. And you have to look at that. Like, what factory is just going to say, now I know we're in holiday season, but let's say in a normal situation, they just say, you know what, hey, we're making money hand over fist here, but let's take a couple of days off. We're just going to shut the factory down. It just doesn't happen, right? So demand is very, very steady. Now, of course, if there's a nuclear war and, 3 billion people are killed and global trade comes to a stop, Okay, yeah, demand for oil is shifted to the left, but that it doesn't shift. Let's just say it's very, very, very sticky. But with that in mind, oil has to be found and discovered and dug. You know, you have to dig a hole and suck this stuff out of the ground. Um, it's it's not like sucking water out of the ocean. So supply can be here one day, and then supply can be here one day, and then supply can be here one day, because once you use it, you burn it up and it's gone. And supply can shift left and right, left and right. And we do this in inventories. And we have seasonality, we have seasonality, we have business cycles. We have multiple cycles going on, which can also determine supply. So what I'm saying is, if you're looking at inventories of oil over a year, you have something like this. And I've done this research. Just go to the EIA website. Just please take my advice. Go to the EIA website, look it up. It's not hard to find. I used to get it emailed to me all the time. I was on, when I traded oil, like oil, not the oil on our MT4, but when I traded oil, you know, I watch this stuff weekly, right? Even almost daily. But anyways, let's pretend, well, this is June 1st, we know. So I don't think it's not quite this, but it's pretty close. So we'll say this is Jan, this is June, this is Jan. Okay, 1 year. And oil inventories tend to build up, and then we draw them down, and then they tend to build up, and then we tend to draw them down, and we tend to draw. And here is the supply shifting left and right, left and right. So as we add oil to inventories, we shift to the left. Okay, and then once we have lots and lots of oil, June 1st hits, we start driving all summer, we start using air conditioning, all this kind of stuff. And then it gets cold, and we start using heating oil, and inventories are going down. Okay, and then spring arrives, and everyone's at work, everybody's at school, people don't tend to travel, right? You're getting back to your real life. And then we're stockpiling oil for future demand. And then, you know, we build inventories again. So here we deplete inventories, and the supply goes from S1 to S2. Then we build it back up from S2 or S3 to S2, right? And we're constantly moving this thing around. And that affects prices. So, okay, when inventories are high and demand is constant, you get prices at this level, P1. Okay, when inventories are low, prices are high. Okay? So when inventories build up, prices tend to fall. And then when inventories get low, prices tend to rise. Okay? So there's a seasonality to that. But I tend to isolate demand and just say demand is constant. Oh man, I gotta go, man. I gotta go. Any last questions? I really gotta go. But I'm happy to be here and happy to help. Well, Grind Alchemy, all the information's out there. Okay? All the information's out there. If you want to know more about oil, go to the OPEC website, go to the EIA website, and go to the IEA website. And you should be tickled pink okay? You should be tickled pink. So yes, have wonderful holidays. If you could, would you please leave a like on the video right now? And maybe come back once the video is updated to the web to the YouTube channel. Would you please leave a comment? and maybe document what you learned, or just say thank you or wish me a happy new year or something like that, but that would be appreciated. What you're really doing is you're telling YouTube that this is quality content that they should share with other like-minded people. Okay? Cool. Well, thank you for being on my team. Thank you for being a client to Trader's Way. If you want to use the calendar and the COT data that I used today, just visit Forex.Today. It's on the top menu channel. And I will see you next year. So peace on earth. May the pips be with you. May your profits be above average. Take care, y'all. Peace.